Cryptocurrency. One of the first things that may come to your mind when I say that is volatility. Cryptocurrency has a notorious reputation of being extremely volatile in price. Crypto's going to the moon, people getting scammed, people getting rug pulled, crypto's going to zero in a matter of hours. These things have become synonymous with the crypto industry, unfortunately. A large portion of people out there just don't get involved in crypto because of all of this. But what if I told you that there were ways to invest in crypto without having to deal with all the craziness? In this video, I am going to tell you about the most conservative, the least risky ways to invest in cryptocurrency. Let's get into it. Hello, my name is Tristan, the Yonderpreneur. I help people learn to live as sovereign individuals. What does that mean? I help people learn to live a more financially and geographically free life. This video is not financial advice. Talk to a qualified financial advisor before you make any investments. I cannot tell you how many times I have had a friend or an acquaintance come to me and ask, "Hey Tristan, should I buy this cryptocurrency token?" And it's usually something ridiculous like Zoomer token or like Goober token or like Pepe token. So then I ask them, well, can you tell me about this token? Why do you want to buy it? What does it do? And the answer always varies. Sometimes it can be as simple as, oh, somebody told me it was going to go up. And other times it's as extravagant as, this is the new form of money. Everybody is going to use it. It's going to replace the dollar. This is the future. And it's called something like Dingus coin or something. So then the next question they ask me, do you think I should buy this? And I'm not a financial advisor, but I say, no, you probably shouldn't. But I think when it comes to crypto investing, you don't want to discourage people from getting into it. So I do say, maybe throw $100 at it. It's probably going to go to nothing, but you'll feel connected. You'll feel involved. You'll be part of the community. And hopefully you can take this as a learning experience and take it to a project that is actually, not garbage. And most of the time, actually, every single time I've been right. Nobody has come to me and said, "Oh, I missed out on the next Solana because of you, Tristan. You're the worst person ever." It's always, "Oh, yeah, it went to nothing." So if you want to get into crypto investing with minimal risk, there's always going to be a risk, but you can minimize that risk. You can use my eight, eight, eight strategies to try and invest in crypto without having to deal with rug pulls. The number one safest way to invest in crypto without losing money is to work in crypto. Yes, this is not investing in crypto. You are not putting up your own money, but you are getting a job in crypto. So you are working as an engineer working on the blockchain, or you're a lawyer providing them legal counsel. You have crypto companies need to hire people, and this is the best way to learn how to be successful in crypto without putting up your own money as risk. The number two best way to invest in crypto with minimal risk is something called dollar cost averaging. No, this is not some special token or DeFi protocol. This is something much more traditional. Dollar cost averaging is an investment strategy where you regularly invest a fixed amount of money into an asset, such as a stock or cryptocurrency, regardless of its price. This approach reduces the impact of market volatility by spreading out your purchases over time, helping to lower the cost per share and manage risk. So it's like this. Don't use all your money all at once. Spread it out over time. Warren Buffett once said, "Never jump into the river with both feet. Always test it out with one first." Ironically, though, Warren Buffett hates cryptocurrency. He called it rat poison, or was that Charlie Munger? Regardless, both of them said they don't like cryptocurrency, but they are amazing investors, some of the best investors to ever have lived. So, regardless of whether it's stocks, bonds, or crypto, it's good investment advice. The third best strategy to reduce volatility and not get rug pulled in crypto is to be a long-term hodler. One of the best pieces of experience that I took from investing in stocks that I took to cryptocurrency is investing for the long term. When I invest in a stock, I am prepared to own that stock for the next 10 years. Do I think this company will be good for the next 10 years? Yes, then I can buy it. Even if I quickly sell it, as long as I'm comfortable holding it for 10 years, that'd be fine. So I take this strategy and apply it to crypto as well. And when you put it in this sense, it removes a lot of the crappy coins because then you're like, where is this project going to be in the next 10 years? Because most crypto projects don't even last a cycle. So when I apply this strategy, I usually end up buying Bitcoin, Ethereum, Solana, not many other projects pass this 10-year test of time. My number 4 strategy for surviving in crypto for the long term is investing in the right coins. Yes, we're finally getting into the coins. You probably wanted to get into this for a while now. When you invest for long term, for safety, for being conservative, you really get pushed down to, maybe 4 or 5 coins. Bitcoin, Ethereum, Solana. If you're trying to be conservative and save your money and you're not going for that 200x, then you should, in theory, be safer just investing in the top 5 to 10 coins. This way, you still get exposure to multiple coins just in case one of them has a specific issue that hurts it. You still have all these other coins that have diversified you. My number 5 strategy for surviving in crypto and investing conservatively is to use stablecoins. A stablecoin is a type of cryptocurrency designed to maintain a stable value by being pegged to a reserve asset like the US dollar. For example, Tether, USDT, is a popular stablecoin that aims to keep its value to 1 US dollar. It's used to facilitate trading, payments, and transfers in the crypto market without the volatility of other cryptocurrencies, for example, Bitcoin. Stablecoins are basically a savings account. There is really not much a difference between just having a regular savings account that holds money and just holding a bunch of stable coins. It's quite the same. Stable coins are just the crypto version of money. It's good to have some stable coins in your portfolio at all times. So when there's like large crashes in crypto, like a subtract 10% in a day kind of day happens, sucks, but 'tis life. You can use this as actually an opportunity to buy at a good deal, assuming that it doesn't go even lower, which sometimes it does. But having some stable coins on hand to try and pick up these good dips is a good strategy. And just a small side note for stablecoins, when Argentina had its currency devaluing, which happens a lot for Argentina, unfortunately, people in Argentina were moving to the USDT. So it was the current government wasn't allowing them to buy US dollars. So they couldn't switch their Argentinian peso to US dollar. It was a little bit easier for people to go from US dollar to USDT, the stable coin, because, crypto is a little bit more nuanced. It's harder to control. My 6th way for strategic, conservative crypto investing is actually cryptocurrency mining. Crypto mining is another good way to get into cryptocurrency without having to take on way too much risk. When you buy into crypto mining, you're actually getting a device, like a device that you can touch. And this just makes people feel a little bit more comfortable with the concept of cryptocurrency when they actually have something in front of them that they can touch and control. So although you have to put up a few $1,000s up front to purchase the device, now this device is creating you a steady stream of income. So it's kind of like the dollar cost averaging that I mentioned earlier, but now you're just doing it with a device and you're getting that money over time to repay your initial investment to buy the device. And then some, assuming that your device lives long enough and the hash rate doesn't get too crazy. Cryptocurrency mining can vary depending on what kind of crypto you are mining, but probably the most notable would be Bitcoin, just because it's so commonplace. However, the devices are large, noisy, and very costly in electricity. So you can actually use companies that will mine Bitcoin for you in a data center in some far off location, but it's still your device in this data center mining Bitcoin. Another strategic conservative way to invest in cryptocurrency is to do staking. I know some crypto people will hate this description, but staking is kind of like buying a bond or a GIC just in the crypto world. When you stake, you're essentially locking up your crypto for a period of time. Sometimes it's quite long, sometimes it's super short, just depends on what crypto you're staking. But while it is locked up in this period, you earn an investment return on it, and it can range, between 0.5% up to 7%. It just depends on the crypto you are staking. I think at the time of writing this that staking Ethereum is between 4 and 6% a year. So yeah, it's not a bad source of income if you're going to hold Ethereum anyways. You may as well stake it. My last and kind of secret, or not secret, but definitely new and unique way of strategically investing in cryptocurrency is to buy real world assets. This is fairly new in crypto world, but I think it's worth mentioning. Some companies are taking real world assets, so real estate, fixed income, bonds, and they are tokenizing it on the blockchain. In theory, these cryptocurrencies have a real world asset, something that you can touch, or a fixed income. If that defaults, then probably something like the US government also defaulted, and then you got bigger issues than whether or not your cryptocurrency is worth anything. But there are definitely some interesting products that are coming into the crypto space in real world assets, and I am keeping my eye on them. They aren't exactly battle tested yet, so if there is a really bad crash in the market, it is not exactly for sure how they will react to it, but I am confident. So, those were my 8 strategies to conservatively, strategically invest in cryptocurrency to get less risk. And remember, guys, do not invest more than you can afford to lose, and to do significant research before you invest in anything. Thanks for watching, everybody. Let me know in the comments below what you do to minimize risk on your crypto portfolio, or whether you just Hail Mary it, YOLO. It's always fun to talk about regardless. Thanks for watching. Like and subscribe, and I will see you in the next one. Bye bye.